It's a bull. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Lovely day out there. Already in the high 70s if you haven't noticed it and you're living in our local area here. And it's not even 10 o'clock yet. So it looks like our hot season is here officially. It's been more than a week of this type of weather. And here, again, not a weather report. Let's talk about my thumbnail here. Gold and silver crash coming soon. And this is not a clickbait. I genuinely believe this, and I'll tell you why, how, and what happens here, and how I've seen this happen before. But meanwhile, we'll talk about a few other things. We'll get into the spot prices here, Zero Hedge, GATA.org, and we'll talk about the subject of the thumbnail after that. And after that, I'll talk about videos and a few other cool things like what's the best deals out there to buy for gold and silver for you folks out there that don't live in my area and can't come in here. I'm going to give you some advice on what I think you should be buying metals for right now, or what kind of premiums you should be paying. Of course, if you listen to this show daily, you know that already, and it's something I repeat on a daily basis. But I like to say it, in case you never know. The premiums on this stuff could change as well. And in fact, I should tell you that yesterday I've been saying for the last month or month and a half that you should be buying any silver that you're not paying more than $5 an ounce premium for. Unfortunately, I didn't want to do this, but I'm going to have to say anything that you're not paying more than $6 an ounce for, because that $5 an ounce and less silver is getting a little bit tougher to find in certain products, especially 1 ounce and 10 ounce products. Product is available out there in the 100 ounce bars, but I'll get to that later in the show here. First, let's take a look at spot prices here. Looks like the coin showed a bull here this morning, and I don't know what it is. I'm looking at this coin right now. Are the edges worn? A lot of bulls on this thing. So, but let's take a look at spot prices here. And looks like last night prices were much better in the overnight aftermarkets, what they call the aftermarkets, and got a little bit monkey hammered this morning. Same with silver as well, and platinum. Let's take a look at the world spot prices, what the overnight lows were and the overnight highs were. It looks like an overnight low of 27.16 and an overnight high of 27.55. New York seems to open a little bit lower, but let's see what happened. And let's see, New York spot prices 27.21 and again a high of 27.51. And New York's actually the market that we're looking at here. So let's take a look at platinum, 12.48, 18.26. So we're holding on to this $1,800 plus level in gold pretty well. Silver looks really good holding on to this $27 level, and platinum on this mid-12 range. So at this point, I think that we're not going to see 1,700 anytime soon, except when the big crash happens, and I'll get to that later. So, and the same thing with silver. I don't think we're going to see. Actually, I kind of doubt we're going to see these silver prices for a long time, even if silver crashes or when it does. It just depends on the timing. And this year, and again, I'll explain all that. So don't get nervous about this crash thing. Actually, it's something real interesting. I think you'll find it interesting as well. Let's take a look at Zero Hedge. Again, spot prices kind of sideways this morning from where they've been. I like these small increments, though. I don't like seeing gold and silver shoot up, real fast, too quick. And if it does, I like to see it back off a little bit and then hold a level and sit at a level. To me, that's healthy. And that's typically what gold and silver and platinum prices do. When you start to see them just go crazy, that's probably a good time to sit back and either buy the dips or sell into the highs, possibly, if they're consistently happening like that. Kind of like what we got going with our equities market right now. Just up, 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 consistent up, up, like my coin here, just bull all the time. So hard to explain. Well, not really. So we'll move away from the spot prices here. Again, you probably look at those every day. Let's take a look at Zero Hedge. Not too much here to talk about again on precious metals. Western civilization has become a never-ending Jerry Springer episode. It's funny because I've been saying that for years. That more or less, that's what it is. We're just Jerry Springer. That's what politics have become. Jerry Springer show. The left versus the right. Reminds me of that. People throwing stuff at each other, getting into fistfights. Gold fix Aussie, not too much there. That's a crypto deal. Most of the news on Zero Hedge, you probably read it already because I'm sure this is on your bookmarks bar up here, or should be at least. Most of you probably read most of this. The gas run has begun, which has nothing to do with the commodities boom that I see coming up in inflation, major inflation. This is a result of hackers getting into a computer on a pipeline and closing down a major gas pipeline. There's so many questions I have. My first major question in this issue is that how fragile our system is? Is that they can that a computer program can shut down the entire southeast gas distribution pipeline? Really? That's pretty sad, folks. And when you consider it's billions of dollars, nobody had the thought to maybe have a secondary redundant system that they could have relied on. No less, this is just crazy. Think about this. Can you imagine in a commodities boom where prices, gas is even way higher and all of a sudden scarcity hits? What's going to happen then? This system is very fragile, folks. I'd be very careful, and this is the reason you own gold, silver, and most precious metals as a hedge against this kind of stupidity, idiocy, and potential problems coming up. This is not transitory hyperinflation fears are soaring across America. What's stupid about this is just like 2008, all the data was there for 2008. The big crash we had, the economic crash of the times. All the data was there, all the numbers were there, all the signs were there. And there was very few people that got it. Two come to mind. Ron Paul at the time, Congressman Ron Paul at the time, was saying that he was expecting a big crash. He was pointing out this data, and oddly enough, Peter Schiff too. I know people have mixed feelings about Peter Schiff, but Peter Schiff nailed it, as well as a lot of other people. The data was there, but the media, the government, and a vast majority of the public just ignored it. Or maybe it was similar to that story of the emperor with no clothes. The media, the government, everybody was so greedy and having such a good time profiting from all this stuff, just like the US dollar, cheap oil, equities sailing through the roof, that they killed the golden goose. There's two stories that could be here. The emperor's clothing, and I'm sure most of all of you know that story, and the other one would be killing the golden goose. That would be the two major stories for our government and our economies and our economists is first off, not recognizing the emperor has no clothes, and again, secondly, killing the goose, because that's what we've done out of greed. Oh gosh, again, I digress there. What does this have to do with gold, silver, and precious metals? Well, when you ignore the fact that the emperor has no clothes and you kill the golden goose, that's not good for the economies, that's not good for anything, but that is good for precious metals. Let's take a look at some other things, because again, I could just go on and on, you know me. UK rail disruption, nothing really in the news here, like I said, on precious metals. And again, I could just start talking about headlines all day. I could do a headline show. I did click this article, Keep It Simple, Gold versus a Mad World. Of course, it's written by who I consider one of my favorite writers out there as far as precious metal goes. I have a few favorite writers, but this is Matthew Piepenburg via goldswitzerland.com. I like these guys. These guys write some real, I've been said it over and over before, but out of everybody, all the writers out there in precious metals, these guys are some of my favorites to read. And I concur pretty much with what they say, mostly. Or do they concur with me? I don't know. I don't know who's older. So psychologists, poets, and philosophers have written for centuries that many who have eyes refuse to see. And again, I haven't read this article. I just kind of noticed that when I was talking about this. This is exactly what we've just been talking about. Refuse to see. The emperor has no clothes. And many who can think refuse to think clearly, all for the simple reason that some truths, like the sun, are just too hard to look straight into. And I think that's exactly what we got going on with this big giant equities bubble. We've got a huge equities bubble out there. We've got a huge real estate bubble out there. We've got a huge fiat dollar bubble out there. We've got a huge economic crisis bubble out there. I mean, just bubbles, huge bubbles forming everywhere. And your governments and our governments and our corporate media, you're just blind to it. No different than 2008. And guys like Matthew Piepenburg, myself, Peter Schiff, and all the other folks that saw it in 2008 are seeing it happening again now, but on such a large, massive scale, it's almost, again, too hard to look. It says right here, just too hard to look straight into. Others have said more bluntly, truth is like poetry. Everyone hates it. And I think there's some truth to that as well. Well, really good article. I'm not going to read this. I could go in this for a while, but we'd be here for an hour. Keep it simple. Gold versus a mad world. This is on ZH. You can read it for free on ZH. So I highly recommend, if this is your first time watching my videos, that you definitely stop and open this up in another window and read it after my video or before the video. And then watch the rest of my video, please. One of the things that I liked down here was pointing out inflation that we're too blind to see. Nobody's taking a look at. Like I said, the emperor has no clothes. Who's talking about this stuff? You don't see it on again, the corporate news. You don't see it. It's like it's not happening. People are just in denial that we've got big issues going on here and big issues coming up. But take a look at this. Year to date, and despite the 2.6% CPI inflation read. Remember, folks, the CPI is bullshit. It's been bullshit for years. Most of us have known this. All of us know this. It's, again, another example of the emperor has no clothes. For years and decades now, we've used the CPI as a guideline, but we know it's full of shit. Yet we still use it, and nobody really calls it out per se. But I'm not going to go there. So let's take a look year to date. And despite the CPI inflation read above, prices have risen by the following percentages for the following real world goods and assets. So if you're a banker and you really believe the CPI numbers, or you're a politician and you believe the CPI numbers, or you're a corporate media talking head and you believe the CPI numbers, then you're just clearly out of touch. And a lot of times that's what these people are accused of being, is out of touch. So let's take a look. Gasoline up 47%, crude oil 31%, heating oil 8%, propane 26%. Look at these things, folks. Lumber is up to 70%. This has been big news lately. Corn 54%. Look at the wheat products: sugar, cotton, lean hogs, beef. Folks, this is all the stuff we need to survive every day. You can't eat a big screen TV or an Apple iPhone. You can't. And if that's what they're using for the CPI numbers, well, listen, Apple iPhones are still cheap, and TV sets haven't gone up much, and these people are just completely fucking out of touch. I'm sorry I said it. So again, take a look at what everything's up. We are already in a massive inflationary kind of stages. We're at the beginning stages of I think what we could call a hyperinflationary period, or really what it really is a hyper-deflationary of the fiat currency. They printed so much of this shit that it's just worthless. And you're seeing the numbers here, why it is. Again, really good article. I could go on this for a long time. In fact, we're going to get into that a little bit more later. Fantasies are seductive things. Where to paddle, gold adjusted. Of course, these guys are pro gold like I am. So again, take a look at this article. Keep it simple. Gold versus a mad world. Right here. Highlight this. Put it in your search engine. It is on ZH. You can read it for free. Authored by Matthew. Big clap for that one, buddy. Good article. Worth reading. Let's take a look at GATAorg. As I've always said, if you are a gold or silver stacker and this is not on your bookmarks bar, you are really not a gold and silver stacker. You need to be reading this once a week, because you need to know how the game is played and who plays it. This was kind of cool. I'm going to before I get to that, I'm going to look. Most of the stuff we've already gone over. Nothing too interesting that I think that I need to read for you or reiterate for you. And again, if you're new to my videos here, take a look at this site. Put this on your bookmark bar, GATA.org, and you'll be a smarter investor, or a smarter buyer for it, I should say. Why did the World Gold Council join LBMA in protesting higher gold prices? Why? Because they work for the LBMA, and they work for COMEX, and they work for these. They're like, they're supposed to be a private organization that promotes the gold and silver, but really, who pays them? And you know who mostly pays them, or mostly they work for? They work for the LMBA, they work for COMEX in some indirect way. They're just mouthpieces for them. That's not surprising. No point in reading that. This was an interesting article, I thought. Hugo Salinas, I think he's the billionaire out of Mexico, owns a lot of silver mines, owns a lot of stuff. Basically, a little confusing to read, maybe because of the translation, but more or less, This is Hugo Salinas Price, President, Mexican Civic Association for Silver. If you're a silver stacker, you should know more about this guy because he is on your side. Of course he is. He owns a lot of silver mines. Central banks, Russia and China, both perhaps accepted, are all members of an international club of bankers. This blub, I don't know what a blub is, a run club probably. This club is run according to the rules dictated by the bank BIS. In Basel, Switzerland. Remember, BIS has these new rules that come up that are supposed to be going to limit the COMEX and LMBA from manipulating the price of gold. But I kind of not sure about that because, again, I think the BIS is just as crooked as the COMEX and LNBA and more or less work for them in some weird way. So I think this may be smoke and mirrors, the Basel III thing that they're talking about, but I digress again. Let's talk about what Hugo says here. Events that took place years ago resulted in the conversion of all currencies administered by the banks the same sway of BIS into fiat currencies. That is to say, currencies that have no support or connection with precious metals, silver, or gold. So here you got the world's, I think he's Mexico's richest man, Hugo Salinas, talking how central banks aren't backed by silver or gold. He goes on down here, all things humans are subject to change except human nature itself. The current financial institutions of the present have fallen into a condition that is at odds with human nature. They function with an exclusive use of fiat money. And this is really interesting to hear the world's one of the world's billionaires talk about fiat money. He's got a really good point here. But, you know, in the nature of things, the condition of the financial institutions of our time will doubtless be subject to radical changes. Of course we know that. And of course I'm expecting crash. You're expecting a crash. Everybody that knows the emperor has no clothes is expecting a crash. So, so does Hugo, obviously, here. In the nature of things, when world disorder, that is war, undermines the sway of the BIS, some countries will necessarily revert to real money or gold or silver to maintain peace and economic cooperation among their populations. In the coming world monetary disorder, the situation of national central banks will have become irrelevant. For the remainder of the commentary, we can take a look here, and I'll click there just to see. I kind of read the whole article again. I think the translation makes it a little tough to read, but here it is. If you get a chance, this is called Silver Coin from Mexico, the website of Hugo Salinas Price. Again, I'm not sure what Price. Oh, is that his last name? Hugo Salinas Price. Get this. Yeah, it is. I'm sorry. I thought I didn't know that. The End of the Present Dark Ages is the name of the article. Again, take a read on that. You've got a billionaire here talking that he thinks that he's also been promoting Mexico to go on to a silver standard. So this is pretty cool. This could be a game changer as well, for Mexico at least. Well, let's get into what I call the big lie, the big freaking lie. What is the big lie? The big lie is this: U.S. inflation, CPI rates. And what did I want to point out to you is what we're going to see here is, look at this, 2000, where is it? 2009 right here. Look at the inflation rate is down. This is, look at it, 2015, and where is it? 2011. Inflation was rising right about the same price gold was rising. Now take a look at this 2011. Then we had the silver and gold crash right here. And what happened? Inflation, the CPI went back down. Where was the CPI right during the height of the gold market in 2012? Well, look at that, 3.16%. It was rising. It was going from here to here. Our bull market in gold, I want to show you where our bull market in gold started back. Our last bull market in gold and silver was 2012. I'm going to use that as a guideline because 2008 is not really fair. Different times, different things, some similar circumstances. But let's use 2012, our last big bull market in precious metals. I'm going to show you something that I noticed here. It started right about here. In my opinion, 2002 was the beginning of our bull market in gold, silver, and platinum. And if you notice, look at this CPI, and I can show you that over here by taking a look at the gold chart. Let's look, I'll go back to 2001. Take a look at this chart right here. Now here's your gold chart. Up, up, and away goes my beautiful balloon. So these are recessions too, by the way. You see those little lines? Those are recessions. But look at the similarity behind this line. Up, up, and up. Basically, gold and silver prices had started to make their move. And a lot of people didn't notice precious metals until we got to this point right here. When we got to this point, then this is why you see that moving up really quickly. But here we are today over here. But Our precious metals bull market, the last big one we had, started in 2001, thereabouts, and ended in 2012. We didn't see it go back down to these levels. However, we did see it back off quite a bit. We went from a high, 2000, a little over 2000, down to 1400, and where's that low? $1,200 in 2015. Well, here's our secondary bull run right here. I think you see this point right here, this was our low. I think this is where we started our next bull run in precious metals, 2016. And I think 2016, we could equate it to 2001 right here, where we've seen this happening. So this is what I believe we have happening right now. Take a look at this little recession thingy here, what that did to the price of metals, and take a look at this. Again, I think we started our new gold and silver bull market in 2016. Here we are right here, some choppy trading, but we've got another recession going on. And I think we're going to see this continue to climb. Again, take a look at the inflation chart, though. This is really interesting as well. 2001, inflation rising, as is the price of gold, rising. 2008 financial crisis. Look at the 2008 financial crisis, 3.84%. Look at that immediately afterward. What is that? Does that say negative 0.336%? So that was a crazy time in 2008. But again, our bull market in precious metals started right about here in 2001. And where is 2012? Right about here's the height of our market, thereabouts. And then 2012, the CPI comes back down to here. Like I said, take a look at this market. So I think we're in a big bull run market here in precious metals, gold and silver. I think the CPI is kind of full of shit, but I think this line is probably fairly accurate. It only would need to be up in this 6% or higher level, in my opinion. Here, you would see the same type gyrations, but I don't see it this low. And why do I think gold and silver is going to crash? Well, here's my reasoning: is if you take a look at this chart right here, look at where we were right prior to the economic crash, and then during the economic crash, what happened? Everything just went to the shitter. And so did the price of precious metals. Take a look at this. In 2012, here we go, 2012, what did we get? $1,200 there. Look at that, at the height of the market. When the economic crash happened in 2008, look where we ended up with precious metals. 800, and that's quite a, and silver got hammered just as much. So we went from $1,200 during the economic crisis, 2008 economic crisis. When everything blew up, gold and silver prices blew up with it. Gold and silver prices went down to a low in October of 2008 to $893 an ounce. So take a look at that. And actually, I think the financial crisis was right about here. Maybe gold was telling us a story as well. But the financial crisis was right about here. So look how low the price of gold got. However, the problem with that is gold went down to $809 an ounce, but there was no gold Eagles, Krugerrands, or anything to buy. Premiums were just as crazy during this $800, $900 period gold when gold crashed than it is now. I mean, people were paying $200 over easily for gold Eagles at the time. I remember silver had a $5 to $10 premium as well during this period, during the 2008 financial crisis. And you really couldn't buy metal at that level. But if you could buy the dips. You did pretty well, because look what happened after that. Well, I see a similar scenario playing out here. I do see, look, here's a recession again. If you notice, show recessions, I'll turn recessions off. I can do inflation adjusted or non-inflation. There's non-inflation adjusted, but since we're looking at the CPI over here, I wanted to have that turned on. But I believe we are in a similar area right here. You see this area right here? I think 2016 we saw an incline in the market in precious metals, and then we saw a big decline just for a short spike during the financial crisis, and it was just all up from there. I believe right now 2016, the parallel to 2016 would be over here. I believe we are in a similar type recession, but only 10 times bigger, which means I think that this line is going to be 10 times bigger coming up. That's just my opinion. And as I said here, the gold and silver crash, it's going to happen when this, when this economic bubble burst. Whether it's stocks, bonds, I think it's going to burst all at once. Or, you know, if we're not lucky, if we're lucky, they'll be able to burst each bubble at a time and slowly let this thing unwind. But I don't see that happening. If we have another 2008 like major crisis, you're going to see everything across the board get exploded. That includes gold and silver prices. But as I said, it'll be highly unlikely you'll be able to buy anything but paper, gold, and silver at those, at that level. Similar to what happened in 2008. So the big lie is the CPI. However, if you take a look at these numbers, they do correspond with what I've been talking about here. And as I said, just like this 2008 financial crash, I think we're going to see it again here sometime soon. I would find it hard to believe that it's not going to happen this year. However, I have underestimated the Fed and their ability to print money for about 4 years now. So, you know, maybe I'm just underestimating what the Fed can do. But at some point, it's going to blow, folks. That's just my opinion. I'm not a financial advisor. I'm just giving you my opinion. So that's really about it. Let's take a look at yesterday's video, and not too many questions to answer. I'd like to thank everybody that watched the show yesterday. And let's talk. Xi Jinping Bear says, yes, jewelry, but it's much different than what you think. The fact of the matter is that when you buy jewelry in India, I was talking yesterday about the gold prices, how they use in the graph. They said that, you know, a certain 40% of gold is used in jewelry, and my claim is that that's not really true. Indians and Asians buy gold jewelry as an investment, like we buy gold, silver, and platinum coins and bars as an investment. Jing basically pointed out something that I did not point out here, is that that gold that they use for jewelry is mostly 22, 23, or 24 karat. And as I said, it's not really jewelry per se. It's more of an investment for them. So it should be considered an investment, not jewelry on the graph. That's just my opinion. Landshark says silver started out good, then tampers must have woke up late in the day. Yeah, you're going to see more of that. Thanks for watching, Landshark. Michael Rodriguez, what's your opinion about gold nuggets? It may not be a coin form, but is it gold? I don't know, Michael. I'll take a look. In fact, if I can, I'll take a look after and let you know what I think. Give me a call when you get a chance. Hey, Ananda Manana says, I just shared this video with 78,000 people on the Wall Street Silver Forum. Thank you. You're very much appreciated. I appreciate you watching and anyone else that does. Thanks, Ananda. Rick, hey, thanks for watching. Wish I knew what drives the variance in gold and silver ratio. That's just the differences in prices, sir. I don't know how to explain that. But thanks for watching, Rick. Nice to see you there. And Linda says, what do you think about the 401k in gold or silver? Isn't that third party? Yeah, of course it's third party, because I don't think you can hold your own precious metals in, but if you got to hold precious metals in a 401k or something, I guess you need to find something that has allocated metal in it. I don't know what to tell you on that. My specialty is in physical only. Well, that's really about it for yesterday's videos and comments. Not too many comments there asking questions about the video itself, but I'd like to thank everybody that watched yesterday's video and commented. What's the best deals out there still? Best deals out there in gold and silver. I've adjusted my silver premium a little bit. Anything that you can buy for under a $6 premium over the price of silver is the best deal. I can still get silver bars out there between $4 and $5 an ounce. 100-ounce silver bars are a good deal. But as far as 1s and 10s, man, I think they're in that $5 or $6 range when you can find them, if you can find them. 90% is even up in that $5 range. So silver is getting more difficult to source in smaller increments, like 1s, 10s, and those kind of things. As far as 100-ounce bars, I still have a really good source for those. So if you can pony up and buy a 100-ounce bar, that's the way to do it. You're not going to pay more than spot plus $4.50 from me right now. And I do have them on hand. As far as gold goes, best deal out there is still gold bars. If you can pick them up anywhere from, I'm going to say $60 to $80, $60 to $85 over the price of gold, that's a good deal. If you're paying more than $100 an ounce premium on any of these gold products, you're paying too much, in my opinion. Gold Eagles are overpriced, in my opinion, at $180. Maples are overpriced. Krugerrands, if you had to buy any of the coins here, I'd buy the Krugerrands right here. You should be paying no more than spot plus 110. I think they're closer to spot plus 100 or even less. But Eagles and the other products that are well over that price, my recommendation is to stay away from them. There's no good reason to be paying $120, $180 an ounce premium for any gold products. There's no good reason. Happy to debate anybody on that. Same thing with silver. Right now, when there's products available that are under a $6 per ounce premium, there's no reason to buy Silver Eagles. There's no good reason to buy any of those products if you're paying more than $6 an ounce. Again, let me emphasize, there is no good reason. Happy to debate it with anybody. If you get some thoughts on that, please let me know in the comment section, and I'll be happy to answer it. And you know I answer everything civilly, too. I'm not going to jump in your shit, so just don't jump in mine. And even if you did, I'm not going to say too much. That's really about it. The one thing that I recommend, if you don't watch, this is the first time watching my show here, my video, I am a local dealer. I don't do any online sales. I only do face-to-face sales. We do cash and carry up to $10,000 per customer. Over $10,000, we do checks only. Delivery is 8 to 10 business days. We've been in the same location since 1977. I mean, 1995. I've been doing this since 1977. My father was a dealer. One of the things I recommend if you're watching my videos and you don't live in my area and you can't buy from me is to buy local. Keep it in your state, keep it in your city, keep it in your county. If you don't have a local deal in your city or your county, make you drive an hour. At least keep that money in your state. Buy local, spend it here, and keep it here, folks. Well, that's really about it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime if you got questions about what the best deal of the day is or any other questions you may have at 954-493-8811. We're open 10 to 4, Mondays through Fridays, and happy to help you out. If anything else crazy happens today, I'll do another video, but usually I don't, so I'll probably talk to you tomorrow. Meanwhile, hey, thanks for watching. Make sure you hit that subscribe and like button. It really helps me out a lot, and I do appreciate it. Have yourself a great day, and talk to you soon.